Hey guys, this is James, and today we are doing video 30 of this series. Finally, we get to SCHD, one of the most popular ETFs out there. The reason why it's so popular is because it does have very good market price growth as well as an above average dividend yield. Well, in this series, what we try to do is we have already taken all of these 29 separate ETFs on screen and determined how much of each of these ETFs we need to own or how much we need to have in our portfolios to hit $1,000 a month. And today's video, we are doing SCHD. So what do we do in this series? Well, we take an ETF for the day. Today's ETF is SCHD. We go over to their webpage and see what they are doing to actually pay us a dividend yield. Then we go over to Seeking Alpha and try to determine an average dividend yield number from their daily dividend yield chart. Come over to my compound interest calculator. We won't take a look at all of it, but this will tell us how much of an ETF or stock we need to own to hit $1,000 a month in dividends. And then to round out the video, we compare today's ETF with the S&P 500 index. So let's get started. For SCHD, it is Schwab's U.S. Dividend Equity ETF. So what does this actually mean? Fund's goal is to track as closely as possible before fees and expenses the total return of the Dow Jones U.S. Dividend 100 Index. So what is the Dow Jones U.S. Dividend 100 Index? Let's read on just a little bit. A straightforward low-cost fund operating potential, tax efficiency. The fund can serve as part of the core or complement in a diversified portfolio, tracks an index focused on the quality and sustainability of dividends, invests in stocks selected for fundamental strength relative to their peers based on financial ratios. So I did a little bit more digging, and because this doesn't really tell me what I want to hear, it doesn't tell me what they are actually doing. So let's take a look at what the Dow Jones U.S. Dividend 100 Index is. You type that in Google, you'll probably end up on a web page just like this, the Dow Jones U.S. Dividend 100 Index. So scrolling on the page, it pretty much says the same thing that Schwab's page says, and I'm sure that Schwab's page just probably took this explanation and put that on their website. So I dug a little bit deeper. If you click on their methodology, click on this PDF link, and on this PDF on page 20, you come down to the Dow Jones U.S. Dividend 100 Index. There's other indexes listed on this document, or in this PDF document, but this finally gave me a little bit closer snapshot of what they are actually doing. So to be able to screen and be in this dividend, you need to have a minimum 10 consecutive years of dividend payments. You need to have a float adjusted market capitalization of $500 million US. So what is a float adjusted market cap? Well, just a quick Google search. A float adjusted market cap is a measure of a company's current worth as determined by the total market value of all its free floating shares of stock. We won't go too much into what that means, but it does have a fairly decent size market cap. And then they have a minimum 3 months average daily traded value of about $2 million. So on a daily basis, on average, they are trading around $2 million per day in and out of SCHD. So this is gives us a better look at what SCHD is actually doing, what index they are following to give us the good returns and above average dividend yields. Coming over to Seeking Alpha, you can see in the past 5 years what their price has looked like, and in the past 1 year they have been down, but I don't believe they have been as down as the S&P 500. Coming over to the dividends, daily dividend yield chart, looking at the 5-year history of the daily dividend yield, it looks like about 3 to 5 years ago, they were hitting anywhere from about 2.5% all the way up to about 3%. And then we pretty much skip from about February to about the beginning of 2020, February 2020, all the way to maybe February 2021. If we take all that out, because we know what happened between there, in the remainder of 2021 and 22, it looks like we're hovering around a 3%, with the dividend yield going up slightly because we are going down again in the stock market. So what type of dividend yield would we like to choose to be able to use for our calculation? Well, I would be safe to say let's choose around 3%, because that seems to be a fairly decent dividend, or a fairly common dividend yield number over the past 5 years. So about 3%. Before we do that, let's just take a quick look at their dividend history payout. Are they trending upwards and over the course or the history of paying out a dividend? And it looks like they are. It looks like there is a little bit of ups and downs, but overall it's trending upwards and to the right. Take a look at what their holdings look like, and do recall that we just went over the 3 criteria that they use. The holdings in this fund, they trade at least $2 million on an average daily traded basis. They have a float adjusted market cap of about at least $500 million, and they have a 10-year history of paying out a dividend. So as you can see, some very common names here: Pepsi, Texas Instrument, Cisco, Coca-Cola, Home Depot, Merck, IBM, Broadcom, and Pfizer, with a total of 104 holdings according to Seeking Alpha. So let's see, with our 3% dividend yield, let's see how much SCHD we need to own to hit $1,000 a month. At 3%, we're not going to touch the growth and contribution, but if we were, let's say the annual growth rate for SCHD follows their 5 to 10 year history. So their price performance, 7.4%, 5-year CAGR number, 7.4% for 5-year history, 8.7% for 10-year history. Let's say cumulative annual growth rate for SCHD was 8%, reinvesting that dividend at $500 a month, starting with $1,000. In the blue, we have SCHD with these growth and contributions and this dividend yield number. You're looking at this type of portfolio over the course of 10 years and this type of income over the course of 10 years. Well, how much of SCHD would we need to own to hit $1,000 a month in income? We would need $400,000 of SCHD to hit $1,000 a month, and $2 million of SCHD to hit $5,000 a month. So there you have it. SCHD, you need $400,000 to hit $1,000 a month. But wait, let's go ahead and compare SCHD versus the S&P 500 index. We're going to do that over on Portfolio Visualizer. Starting in the time period of October 2011, which is the inception date of the newest fund. The first inception date was SCHD, October 2011, $500,000 invested in both ETFs, SPY versus SCHD, and they are fairly close by a razor thin margin. If you would have invested $500,000 in October of 2011 in both funds, you'd be sitting around $1.9 million in August of 2022. For SCHD, that would give us a 13.42% cumulative annual growth rate in this time period, and for SPY, a 13.3% cumulative annual growth rate for SPY. Let's go ahead and not reinvest the dividends. Let's say you were to pay yourself starting in this time period from October of 2011. If you were to pull out the dividends and not reinvest them, here's how your CAGRs would be affected. In this time period, you would go from that 13% down to 10% per year for SCHD, and from that 13% down to 11.1% for SPY. What type of incomes would you expect to receive? Well, the first full year, 2012, $15,000 from SCHD and $12,000 from SPY. And in the most recent full year, 2021, $44,000 from SCHD and $22,000 from SPY. Do recall that you invested $500,000 in October of 2011, and that fund started to grow, which allowed your dividend income to grow with it. But recall, this is not reinvesting the dividend, so this is what you would have actually been pulling out and putting in your bank account, but then you'd have to pay some type of tax on it if it was not a tax advantaged account. So that is SCHD. Hopefully you guys enjoyed this series. That concludes the regular ETFs that we had scheduled for this series. Over the course of the past around 30 days, we received around 16 comments. Now, I'm not going to go and do one video for each comment. We're just going to real quickly find the dividend yield in another video. And then for all, well, this was actually be 12, not 16, 3 times 4. So this would be 12 separate ETFs. We're just going to go quickly and find the dividend yield and then determine in a spreadsheet how much of each of these 12 ETFs we would need to own to hit $1,000 a month. So if you guys want to see that video at the conclusion of this series, subscribe to the channel so you'll be notified of when that video comes out. If you enjoyed this series, smash that like button. That really helps out. And I'll have a playlist on the channel of all of these videos in one playlist if you want to see them all. And with that, thanks for watching.